You see, it say preparing for stream. Now is live.
Ooh,
Yep.
welcome everyone to the Wall Street Rundown.
Yes.
I'm your
Yes.
co-host
Yes.
Wale.
And I'm your co-host Billy Clement. Welcome to another episode, man. While it's been a crazy week in the market. Like, let's start with Monday. Let's run through some numbers real quick. Let's go back up all the way to Monday, March 3rd, right? We saw a crazy decline after the whole tariffs that have been imposed by President Donald Trump, right? So he imposed tariffs on Canada, Mexico, and China. Like, all the announcement came on Monday. The S&P fell almost damn near 2%. The Dow Jones was down like 1.6, 1.8%, I think what it was. The crazy thing is the Nasdaq, I think, actually entered the correction territory. I think we went down like 9%, I think, from Nasdaq from the high of December. Because I think we were
Yeah,
even closer like the 200 EMA. But we
yeah.
dropped like crazy, man. A lot of companies like Apple, Amazon, those companies that actually have direct correlation with the China market or whatever, they all dropped like crazy. But overall, the whole market just kind of went down. We saw some pockets here and there that didn't get really affected, but overall, man, I mean, IWM dropped like crazy. Like if you were in IWM puts, you made some good money. You know what I mean?
Yeah. See, I
So,
got I got distracted on Monday with that.
and
But I did.
the crazy thing, remember, like last week we talked about it. I sent you a screenshot of some people buying IWM like a 201, 205 puts and stuff. And I was like, whoa, something's happening. I'm talking about like last Friday and Thursday.
Mhm. And
And bruh, Monday just like took off.
and IWM is the only index out of QQQ, SPY, and IWM that's below the 200-day
Yep.
EMA and 200-day SMA. And the only thing holding the market in place right now. So if you go to NASDAQ futures
Mhm.
and you go to ES futures, it's just that 200-day EMA.
Yep. It's
It's
literally sitting there. Yep.
it's literally just holding. And I personally feel that it is only a matter of time until we possibly start to breach that level.
Yep.
I thought we were going to close below it today, but then all of a sudden we had
Yeah.
a
Let's let's
change of
talk let's talk,
a
let's talk
change
about
a
that.
change of a
Yeah.
change of heart.
Let's talk about that too. I mean, even today, like, I mean, I don't know if you guys watched the address to the Congress yesterday. I feel like it was a show. I mean, that's just my opinion. It was a show of what exactly we're doing and a show off. Let me talk to my people who voted for me. But anyways, I mean, there was a stern sound that came out of there, like, we're gonna do tariffs, we're gonna do this, we're gonna do this, and then turn around today and say that, I
This is
mean,
this this is the second time.
oh,
This is the second time.
and I think it holds true because we talked about this before. Like, we think the tariffs tactic is being used as a way for negotiations, right? If because Canada's, I think his name is Trudeau or whatever. I think he ended up talking to President Donald Trump today, and shortly after that, we got that announcement that they're pushing the um the tariffs back up by a month, right?
Hmm.
So I don't know, man. Like, how do you, what are your thoughts on all this thing that's happening? Um, and the other question is, how do you trade in this market that's like always just gyrating like this?
So the word I would use to describe it, chaotic. It's
Mm,
just chaos. There's there's no structure or order to how these tariffs are being implemented. It's kind of
yeah,
like I'm gonna just do this when I want to. I'm gonna just do that when I want to. If I want to pull back when I want to, I'll pull back when I want. There's no order. It's chaotic. And to
yes,
me, who I feel sorry for as a company or a CEO or a CFO, I don't know what my cost is.
yeah,
What
yeah,
is my future? What is my future cost of goods? I don't know. How can I forecast? How can I give guidance to investors if I don't know what it's going to cost me to get stuff to the US?
yeah, exactly.
I mean, that is utter chaos. Like, here's my thing. If you think tariffs are the solution, implement your tariffs, do what you got to do, and then see if people come to the table and want to negotiate.
Right.
But telling people one thing one day, then completely changing your mind the next day on a whim It is utter chaos. And to
Literally.
me, it's not fair to consumers. It's not fair to producers.
Mm-hmm.
Like it's not like you have to really sit there. Just imagine you're in a board meeting and you're like, okay, what's going to be our cost for Q1 or Q2? And
You have
everybody's
no
scratching
idea.
their head. You have no idea.
Right.
I mean, I guess the best thing you can do is prepare for worst case scenario and pray for something better. But praying is investors don't want to hear about prayer.
Nope, nope. And we don't investors and traders alike. We don't like unpredictability, right? It's the market is not
The market
predictable.
doesn't like it. Yeah.
Yep. And even like we talked about this too, like when you start looking at charts and stuff, like the charts might make sense going one way, but then a piece of news come out and it's like it completely invalidated what you're thinking it should be going.
I don't even know if you can trade the charts. I don't know if you looked at the I don't know if you looked at the market the first like maybe hour or two.
Yeah.
All you saw was this.
Yep.
That's all
Yep.
you saw. And I was able to scalp some game, but I didn't feel confident. Like
Mm-hmm.
this is one of the toughest markets to trade. And to be 100% honest, if you're not in front of your computer watching it tick by tick, you can get chopped up.
Yo,
Like
very. It
you
gets
can
very
get chopped
choppy.
up
Yep.
fast.
Yep.
So
Yep.
sometimes, I mean, for me, I didn't trade the second half mainly due to my schedule, but I don't think I would have felt comfortable trading in the second half. Now I saw the rally, but at the same time, it's kind of like, what happens tomorrow?
Yeah. Yeah.
What if you wake up tomorrow and you get a completely different announcement?
It's a complete different market. Like it's literally every day you wake up, it's a different market.
Yeah, Mr.
So
Jones says starting to think that the chaos is intentional. I mean, I feel to me it looks like market manipulation.
yeah.
And the same person is going to know a bad outcome would follow. This is level of confidence. Yeah, I just I don't if like I said, if tariffs are your policy, right? If that's what you want to do, fine. Put some structure to it.
Yeah.
Like, can you imagine, like, let's just say you're a tenant and your landlord comes in and is like, all right, your rent's gonna be X. Then 2 days later, they're like, you know what, your rent's gonna be Y. And then a couple of days later, he's like, you know what, your rent's gonna like no one can operate in that type of system.
It's too
Put some
chaotic.
yeah, put some structure around what you want to do. I'm going to impose tariffs on this. These are the line items, or these are the things that I need by this date. If I don't get them by this date, then this is the. But it's like, I don't know. I can't describe it, and it's frustrating. But
Yeah.
I really don't know. I mean, I've talked to money managers, and they're like, we can't necessarily like figure out where we want to put opportunities. Like we see opportunity there, but we're like, if we buy today, based on how things are going, we could possibly get a better opportunity later. So we might as well just wait. But then if you wait and then things pop off, you can be like, oh, I missed it.
Right.
So
Right.
man, it's hard for everybody. Like it's hard for everybody. Retail, institutional, like no one knows what's gonna happen.
Yep.
So
But like I always say, somebody always knows. Like that's the crazy thing. I mean, we saw some crazy moves that come in, like even last week before the market, went
oh
down.
yeah, oh
We saw
yeah.
some crazy moves. So I was like, somebody always knows what's happening. So I do agree there might be some market manipulation here. I mean, the people who are inside the cabinet or even in Congress, they probably know what's happening, right? Like, I won't be surprised if they disclose some trade later on and some people actually sold some stock or some people bought some puts and options, like, in the government. Like, it happens, right? There's no regulations in that. So they know how to play the game, basically. So, but as us as investors and traders, I mean, you're right. This becomes a very hard environment to trade in now.
Hmm.
If you are a scalper and you're able to move with the market and get those quick gains and take your profit and don't be emotional trying to go back and get some more, you might be doing really good. You know what I mean? But if you don't know what's going on, you know how to trade this market. One of the biggest thing I'll say is just sit back, chill, and trying to figure out what's good stock to get in for the long term.
I mean, I have to sit here and reassess a lot of things. Like after the last couple of days, you know, I've had to really like today. I'm not gonna lie. Like I was getting alerts that the market was going up, but unfortunately, I was driving,
Mm.
and I'm just like, will one catalyst about trade be the silver bullet that drives the market up or down every single day? One thing I will say though is this: no one is talking about or is not giving a lot of attention to the GDP forecast for Q1 2025.
Yeah, because we saw that they say it's negative, right? It's going to turn negative.
Exactly. A lot of people are not paying attention to that. So let me tell you why that to me could be a bigger picture. So remember when we first heard about the tariff wars a couple months ago, right? Then the market kind of realized that certain parts of the market weren't going to be affected by tariffs, and those stocks started to move higher.
Yeah.
That didn't happen this time around
No.
because everything got pretty much smacked.
Yeah.
And what I will say is bond yields, long-term bond yields, are leading indicators for economic growth.
Mm-hmm.
When bond yields are going up on the long end, that is usually a sign that rates or economic growth is positive. The 10 year and the 10 year and the 30 year have come down substantially
Yeah.
since then, which is a leading indicator that possibly growth could be slowing down. That's something that I would definitely pay attention to. And if I'm not mistaken, Q1 GDP, if I'm looking at my calendar, April 30th estimate.
Mm-hmm.
So I would mark my calendar because if the Fed comes out, and then I think Jerome talks on the 19th of March.
Yep.
If the Fed comes out and says we're forecasting negative first quarter GDP, because Atlanta Fed is just one part of the Fed. Like
Right.
there's different regions of the Fed. But if they all come out, and I think they're meeting, they don't have a meeting in May. I mean in April, but they have a meeting in May. And they come out and say we're expecting negative GDP, that to me will be a market mover to the downside. So,
Big move too, not just small move.
correct. So I will be paying a lot of attention now to the economic data.
Right.
Unemployment. So we get unemployment, we get uh, jobless claims tomorrow. And I want to say Friday, do we get employment data?
We get
Like
employment data on Friday. Yep.
unemployment data. So I'll be paying attention to seeing what happens on those fronts because I understand that tariffs are what the market is moving on.
Yeah.
But above that, GDP and unemployment are the bigger story. So I am, and based on what I've seen, I'm not really optimistic about where those numbers could be headed over the next couple of months. Now,
Mm.
I'll say this again though. The only problem is those are lagging indicators. They're not leading indicators. They're
Right.
lagging.
Right.
So you're looking backwards in time. But the bond market is signaling as yields have come down on the long end that economic growth is slowing down.
That's a lot, man. I think we're definitely in for a rocky ride. Going to the first quarter, second quarter. It's man. I just can't wait to see those numbers for the first quarter. I can't wait to see them, and
And
I
I
can't wait to
wish
see. I can't wait to see how the
go ahead.
market gonna react to it. Like how the market react to it. So
And I wish that we had the numbers based on some sort of tariff policy.
yeah, he's delaying it.
Like we don't have numbers based on like on what is supposed to be enacted in the tariff policy.
Yeah, yeah.
Because the question that everybody wants to know is, are these tariffs going to be inflationary? Yes or no? If
Mhm.
it's yes, we know how to move.
Right.
If it's no, we know how to move. But right now, we have no idea what's going to happen.
Yeah, because it hasn't been implemented. It gets canceled, it gets moved every time. So we can't really forecast those numbers yet. You know what I mean? So it's
and
it's
that's and that's
it's
the
been
whole thing
crazy.
with investing. You got to make forecasts.
Yep.
You got to make forecasts. And
Right.
I don't know. I mean, who knows? We could just consolidate for a whole month. We could consolidate for a whole month
we
and nothing.
might. We might. We might. We absolutely might. Um, moving to Wednesday. I mean, today we market closed a little higher. After the announcement that U.S. Will be exempt from all those tariffs, right? So even though he said 25% tariffs on auto supplies and stuff, but now it's exempt, right?
Mhm.
From Canada and Mexico for 1 month. Then the the one thing that kind of like I was looking at the weird is like stocks in Asia were kind of high. I mean, we're gonna talk a little bit PDD. If you look at Baba
Baba.
was up there. Like most of the Chinese stuff was up. And I was like, even you said it's like, is there a deal with China that we don't know
That's what I
about?
said. That's what I said.
Yeah,
Like for the Chinese stocks to be up on a day like this, I don't know.
yeah, it's
And
weird.
I was actually reading. So this is what I read. It says so Trump has confirmed that he's going to do 25% tariffs on Canada and Mexico. That was supposed to go into effect yesterday, with an additional 10% on Chinese imports, which brings the Chinese imports to 20%.
Mm-hmm.
Um, then they said that the White House has announced that on April 2nd, they're going to do reciprocal tariffs will be imposed on any country with which the U.S. runs a trade deficit. And that's an additional. And then he said 25% on aluminum and steel, which are supposed to take effect next month. And then they're talking about doing the same thing in Europe. Then you
Mm-hmm.
talked about the tweak about automakers are going to be granted a 1 month, like, grace period.
Yeah.
But I didn't hear anything. I didn't hear any changes from China. So China
No.
is imposing a 15% tariff on American agricultural products. So and they're restricting 15 U.S. firms from purchasing Chinese goods.
Mm-hmm.
Then Canada is introducing a 25% tariff on 30 billion of US imports, with an additional 125 billion in tariffs set to follow in 3 weeks. I also heard about electricity, tariffs on electricity, because there's certain
From
parts
Canada. Yep.
of Canada provides electricity to the United States,
Yep.
and they're saying that some of those consumers could see price hikes.
Yep. Yep.
So
You're probably talking like Michigan, part of Minnesota, like all those northern
correct. They
states.
said I
Yep.
think some parts of like New York and things like
Yep.
that. So um I don't know. It to me the whole thing is a mess. It is
Yeah.
a
Yeah.
complete chaotic, disorganized mess.
Yep.
And I guess what he's trying to negotiate that last USMCA, I think it was. What did I read? Yeah, trying to negotiate some trade deal that was done in his last presidency or something like that. But I don't know. I don't know what the real agenda is, because I can't put my finger on it. But this is I don't know. This is pure madness,
Yeah,
if you
like I
ask
said,
me.
I think it's a negotiating tool. Honestly, would we eventually end up with some type of tariffs? I think we will, but I think it's going to be a lot smaller um
Possibly, I
than
agree.
this. Because you guys gotta think about it, like Donald is a how can I put this? He's a businessman, right? And if you guys
Hmm.
ever read his book, like the art of a deal, right? If okay, let's imagine you in the street of like Lagos, Nigeria, or even or Kenya or Uganda, or whatever, right? The person selling you the good is always going to give you a higher number. You go like, nope, this is no, and then you have to work with him. The barter work all the way down to the actual number, and then when you hit the actual number, if you're smart, you're like, okay, this is where he breaks even. Let me go ahead and negotiate even further down. You know what I mean? It's like you got to know these tactics, right? And I think that's what he's doing right now. We start with this crazy number, 25%, 20%. I guarantee you, we're probably going to end up putting maybe like 2 or 3% tariffs on these things. And the reason why we're going to impose tariffs is because that's one of the things that he promised when he was running, right? So those things need to be in place in order for his for people who voted for him to be happy that he actually implemented a tariff, right? But I think we are going to end up with a tariff. I just don't think it's going to be those 20-30% that we're talking about.
And the reason why I think that we're going to at least see some type of tariff, to me, the whole agenda behind all these tariffs is he's trying to make up for lost revenue when he decides that he wants to cut taxes.
Yep.
That's what I think it boils down to. He
Yep.
wants to cut taxes, and when you cut taxes, that means the U.S. is bringing in less money because
Yep.
that's how they make their money. So if they're going to lose money on the personal income side, you have to find another way
You have to
to
find a
make up
different
for
way.
it.
Yep.
So I
Yep.
think that's what he's doing with the tariffs.
Yep.
I don't know if that's a wise strategy when you're running a huge deficit. Um, but I don't know. And speaking of deficit, a lot of the crypto reserve
Mm.
talk is got a lot of traction over the weekend, and that made a huge spike in crypto that eventually faded on Monday.
Yep.
But here's my question: where are you going to get the money to fund this thing?
Mm-hmm.
Because you're running a deficit. You're already spending. You're not. How should I put it? You're not taking reserves that you have and putting it into crypto.
Yeah.
So you're running a deficit because you're spending more than you're bringing in. But now you want to create this crypto reserve with what money? You're going to print more money? Are you going to print? Are you going to print more money? like,
Oh man.
where's the
Yeah, where's the money coming from this year?
where's the money going to come from?
I have an idea.
Where?
So I don't know if you guys heard about this, but the US actually has a crazy amount of Bitcoin that was confiscated from criminals and all of that stuff sitting somewhere. It is crazy amount of Bitcoin. So I think there might be some ways for them to be able to take that and use that to be able to
Okay, well,
put it back into the deficit, right? And pay off some of the deficit. But the only thing that's standing between them and doing that is Jerome Powell, right? Because Jerome and the policy of them is like they can't really have Bitcoin on the books for the government.
mm-hmm.
So if Donald, I think he came up with this thing where he wants to start talking about crypto. So if he introduced one of this mandate where crypto is not going to be acceptable form of currency in the US government, guess what? All of that reserve is gone. And that gives them a free will now to go after people who are criminals who are using Bitcoin. And they're going to be able to get all that money back. So
see, my question with that is, does that have to go through Congress, or can that be implemented?
Congress ain't doing shit today.
See, I don't know if you can do that through executive order. Maybe you can. I don't know. But
Watch me. Donald's gonna bully those Congress. You saw how they are. Like all the Congress, they're gonna fall. They're gonna fall in line. I promise you. If you come up with that, they're gonna all fall in line. They're gonna fall in line. Like then nobody's gonna be like, oh, no, we're not getting. Nope, they're gonna fall in. They're probably gonna start praising them too and say it's a great idea. You know what I mean?
I mean, we'll see. To me, that's the question I had. It's like, because if you don't have the cash to invest in Bitcoin, all you're doing is you're doing what MicroStrategy is doing. You're
Yep.
taking debt to put into Bitcoin.
Yep.
And if you're going to print more money, that's just going to cause another problem entirely.
They ain't printing no money. They're gonna use those reserve Bitcoins they got, and it's a lot of money. It's a lot of money. So
I
yeah,
would, hey, I would not be surprised, because who confiscated it? Is it CIA or FBI?
the CIA and the FBI, they both confiscated some stuff. I think FBI probably confiscates a lot more. So,
Mm-hmm.
but it's sitting somewhere. It's sitting somewhere. So
Some cold wallet, I hope.
yeah, yeah. Because imagine like that biggest heist that just happened. I think it was like 1.3 billion or something like that. Like
Mm-hmm.
imagine when they find who those wallets are and able to get the keys for those wallets and be able to access those
Those
wallets, be able to
funds, yeah.
retrieve, and move those money back into an FBI secure wallet, right? It's
Mm.
just sitting there. Like they can't do anything with it because technically it's not their money, right? They confiscate it. But I don't know, man. It's at this point it's just an idea. I
I mean, I
think
don't think it's far fetched. I
I
really
don't
don't
think
think
so
it's far
either because
fetched.
we be talking about stuff. So like if you guys been paying attention to the news, man, they be talking about some crazy stuff, like things that you thought like would never even be brought up. They're just talking about it. Like everybody's just throwing any idea out there to see if it sticks. So I mean the biggest thing we're gonna think about was Doge is doing, right? Doge is going around and just firing everybody left and right. I don't know if you guys seen that. They're going to be laying off like 80,000 something veterans employees or something like that. I mean, that's a lot of people that's going to be laid off or fired, right? The reason for that, I have no idea. Maybe budgeting, maybe they're trying to cut costs, maybe it's too big, maybe just redundancy in jobs or whatever. I mean, some of those things happen, right? There's a lot of redundancy in jobs. So I don't know,
Yeah, that's what I've been hearing. I've been hearing there's a lot of waste, there's a lot of redundancy, there's a lot of people
and
that
we
don't
know
have
that though.
use
We,
cases.
we 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 talk about it, right? Like how do you not be able to balance your book as an IRS, the agency that's responsible for trying to figure out the people. Even the United States government can't balance their own books. You know what I mean? It's like somebody's not doing their work.
Yeah, there's a lot of waste in government. I just don't
Yep.
know. My issue is I don't know. Like the process just seems so like
No, it's chaotic.
random. It's
It's
just
chaotic.
it's just random. Because
It's
like I
very
said
chaotic.
before, Clinton did the same thing in the 90s. Like
Yep.
I go back to that, but there was a lot of structure about where they were going to cut and how they were
Mm-hmm.
going to cut and all of this and it was so structured to the point where unemployment didn't go
Nothing
up.
happened. Yeah. Yeah.
Unemployment didn't go up.
Mm-hmm.
The private sector was doing really well. You know, things were doing really good into the dot-com boom, but that was a
Right.
bubble because of a lot of the fluff that was happening in the tech sector.
Right.
But for the most part, I don't know when Clinton took office. Is it 94, 93? But for when he took office and when he cut the deficit and actually produced a surplus,
Surplus. Yep.
I mean, that was impressive.
Yep.
Now, I feel like Doge is again, they're trying to take a chapter out of that book, but the way that they're going about it is just like it's just random. So I don't know how this story plays out. I know the market doesn't like it. I mean, we've
Yep.
seen it with the volatility index. I mean, we got almost up to 27 this week.
Yep. We're
Um,
still up there. I mean, we pulled back a little bit, but we're still up there. I think we closed at what 20.
21.
Yeah, we're still up there. This thing is. I mean, we did a couple of wicks up there, but usually what happens with those wicks is gonna come back and go follow it. You know what I mean? It's gonna go
Yeah.
back and take those orders back again. So I think we're probably gonna end up taking off that high of December, which is
Hmm.
20. Whoa, what was that? 28 or something?
Yeah. December 18th.
Yeah. And
Yeah.
then once we take that, I think we're gonna hit that 60. And we still see those high open positions in the VIX, right? That $60 million, whatever. It was a lot of money for like $60 VIX. So those positions are still out there. Somebody
So
still
this,
believe.
so this is my thing. If we're gonna see a 60 VIX or a 30 VIX, I keep the number that I keep thinking about that we need to pay attention to is that GDP number.
Yep.
Because if that GDP number comes out negative for forecasting,
Yeah. It's
it's
gonna be
not
a
going to be
problem.
it's not going to be good.
It's gonna be
And
a
then if we
problem.
start to see unemployment start to trickle up higher, and we start to see jobless claims start to trick up higher,
Yep.
those things are going to put stress on the market. So I
Yep.
know the tariffs are the headline right now, but don't ignore the bigger story. Just
Yep.
do not
That also
ignore the
can be a
bigger story.
distraction. That also can be a
It
distraction.
can be a distraction.
Yep.
It can be a distraction.
Yep. The other thing is like I looked at the ADP numbers today. So their survey showed that US private employers added 77,000 jobs in February, right?
Hmm.
But the expectation was 145,000
Hmm.
for the month in February, which is crazy.
Yeah,
You know what I mean? Like
that's a big miss.
it's like half.
Yeah, that's a big miss.
So there's definitely a slowdown in hiring. You know what I mean? Like companies are not hiring as fast anymore. It's not because they don't maybe necessarily not have a position open or whatever. They probably we don't know what's going to happen. You know, especially if you're a company that's like dealing with those countries that has to do something with tariffs and stuff. Like you don't know what your books going to look like in a couple of months if those tariffs takes effect. You know, you don't want to take any hit right now by adding more Unfortunately, people don't know this, but employers are debt, right? You don't want to go and add more debt into your books.
Oh yeah, that's usually their biggest cost is employees.
Right.
Yeah, that's
You don't
usually.
you don't want to turn around and do that, and you don't know what's going to happen in the next couple of months. So I absolutely see why the hiring slowing down. You know, so that's potentially like gonna affect economic growth and all of those different things. So
Yeah, I am more worried about the macro picture at this point because the change in the forecast from what we thought Q1 would look at is drastic.
yeah.
Like negative GDP is the first leg of a recession.
Mm-hmm.
Because if you get 2 quarters of negative GDP, that's a definition of a recession. So going from positive, modest growth to negative growth is a
Yep.
very, very big adjustment.
Right.
And I will be paying attention to what Jerome will say on the 19th about what made them make that revision. Again, that's just Atlanta Fed. We got
Mm-hmm.
to see what the other folks are saying, but usually they're usually on the same page when it comes to that.
Yeah.
So
Yeah.
I am not I am not a fan of that news, and I will tell people that are looking to get in the market that to me that's a bigger story than tariffs. That is a way, way, way bigger story than tariffs.
Yeah.
So
I mean, like I said, the whole tariff thing, it might actually be a simple distraction of what the actual thing is going to happen. When the economic data come back into the forefront. Right now, it's just like, and eventually it's gonna fade out too. Like, oh, tariffs today, tariffs no, now tariffs, yes, tariffs. It's gonna fade away after a while. Like people are gonna be like, okay, whatever. We kind of get you just now. You're not really serious about this. Let's stop focusing on the most important things, which is the GDP, the unemployment number, PCE, PCI, all those different things that we usually focus on. So it's coming, man. We are not too far from that 200 EMA still, and most of those indexes.
nope.
And we talked about that last week, right? I was like, we're not that far. I think we are gonna get there, right? As you can see, QQQ is actually QQQ touched it and closed above that today.
Hmm.
Spy, I don't know if Spy hit 200 EMA yet.
See, so ES futures did, SPY did not.
Yep.
So I don't know if you can look at ES futures. ES futures tapped it
Yep.
today and
And
yesterday
yesterday. Yep.
and yesterday.
Yep.
So my thing right now, I'll be honest, if we breach that, I would be a major holder of puts.
Puts. Yep.
Yeah, I would be a major holder of puts because that has been the one level, if I go back, that has held for, man, for a long time. And the last time we breached it was back in October of 2023, where we were down and then we came back up pretty strongly since then. But usually you see when we breach those levels, you see pretty substantial selling.
Mm-hmm. Mm-hmm.
So I would not be surprised if we go below that. But again, at this point, I don't know what that catalyst will be,
Right.
because right now it looks like tariffs hasn't been enough to breach that. So to me,
No.
you need a bigger story or a bigger headline like negative GDP or increasing unemployment that could then cause that drop to take place. So
Yeah. I think it's coming. I still hardly I still very very believe in the fact that we are going to breach that 200 EMA on Spy. We're going to breach it on. I mean, QQQ breached it. It came back. IWM, we below that. you
yeah.
know,
And if
and
you look at, go ahead.
I was gonna say we kind of know like why IWM is like down there because most of their companies that's in there is actually directly affected by the tariffs and stuff.
Hmm.
So
And also by high rates too.
yep, yep.
So I'll also even say from a technical standpoint, if you look at ES futures right now,
Mm-hmm.
third straight week, lower high and lower lows.
Yep.
If you look at NQ, lower highs and lower lows for the third straight week.
Hmm.
So even though right now on a day-to-day basis you're seeing the market kind of fight back, but the trend still remains bearish on
Bearish.
the
Yep.
on the higher time frames.
Yep.
And we all know that the higher time frames really tell the true story, which is why any pop that I see, I don't really, how should I put it? I don't really put a lot of thought into it, because remember what
Yep.
we saw last Friday?
Yep.
We saw that pop
Yep.
and close. What happened? Monday,
Yep.
sold off.
Came
So
completely down.
we got a pop today, and I'm looking at futures right now. We're red.
Yep.
So I mean, we could reverse in the morning. I don't know, because we've seen it happen. But I am just very wary of any sort of intraday. Now, as a day trader, this is probably the stuff that you like, but I don't know. I am I have my caution hat on right now. Just being
Yeah,
patient.
absolutely. Absolutely. If you don't, that's carelessness. You know what I mean? You have to have your caution hat on, because you're right. I mean, I don't know, man. I think I'm with you in this camp. I think we are gonna see a lower move below 200 EMA, honestly. Now we keep creating this equal lows, which from my experience, those always come back to take those liquidity levels off. You know what I mean? It's gonna come back down there and take all that off, because we created that equal lows on, especially if you look at NQ, like we created that on Monday, we created it again on Tuesday and today. Like those bounce areas, like those, it's like we have those sharp um wicks over there. That's gonna come back and get filled again.
Yeah.
So
Let me actually share some good news with you. I don't know if you saw. Didn't get a lot of headlines, but NVDA and Broadcom are reportedly testing chips using, drum roll,
uh-oh.
Intel's manufacturing process.
Oh my god. I didn't see that.
It says this move could result in hundreds of millions of dollars in contracts for Intel. It says the process known as 18A is capable of making advanced AI processors that competes with the technology from TSMC, who is the dominant player
Mm.
in global chip market. And it says last year Broadcom ran tests, but executives were ultimately underwhelmed. It says Intel's 18A technique has been plagued by setbacks and has been delayed until the back half of 2026, and they have yet to announce any major client.
Interesting.
But what they're saying is that NVIDIA and Broadcom still remain interested. Maybe if they can figure it out, and if they sign NVIDIA and Broadcom as clients,
Mm. That's gonna be a crazy catalyst there.
it's the execution now. Because remember,
Mm-hmm.
Intel's biggest failure to date is execution.
Execution. Yep.
And we still don't have a new CEO yet.
Nope.
But to me, the fact that those two names remain interested, I would be watching to see what happens with Intel over the next couple of months. But
Yep.
again, this is going to be a
This is a long
multi-year
term.
story. This is not
Yep.
going to be an overnight success.
This is
But
definitely a long term, long term.
yeah, because I'm looking at their, man, the revenue in their business has just been bad. Like it's just been dropping. Operating income has just been really bad. But if two of the biggest companies are in talks and they're saying, "Hey, if you guys can figure it out, we might become one of your customers."
Yeah. Yeah. And it'd be good too, because you don't want to use the same company to make your chips. Like if TSM is the only one out here making chip, they can get to dictate the price of the market, right? But
Oh yeah,
you gotta have somebody else in the mix there too.
and I
So
don't know if tariffs are playing a factor in why Nvidia and Broadcom are looking at a domestic chip maker.
it probably is.
And
Absolutely, I think it is.
yeah,
They
and
don't
I
want to
know
drive the cost.
and I know TSM is building a factory in
Arizona.
Arizona,
Mm-hmm.
but it will be interesting to see if this is going to help spark some of Intel's comeback if they can figure it out. But
Yeah.
that's always been the biggest thing with them. Can they figure it out?
Yeah. Trump seemed to like TSM. I think he just announced what that was it $100
Hundred
billion
billion,
dollars?
$100 billion investment. Yeah.
Yeah. I mean, that's He seemed to like him a lot. I thought like, man, why didn't you say Intel, man? Shoot.
Intel got a lot of hurdles to jump through, man, right now. They got a
Yep.
lot
Yep.
of hurdles to jump through.
Yep.
But
Yep.
I still stand by my thesis that at the end of the day, the chip builder, TSM, is way more important
Yep.
than NVIDIA is to me.
Yep. Yep.
I still stand by that.
Yep. They are going out to do the same thing CVS is doing right now. I don't know if you've seen CVS chart over the past couple of days, but they've been moving. CVS was up like 2% today. I was reading that their way of breaking down their divisions to different like divisions and selling some of them off has been working, and investors seem to
Oh
like that.
wow. I
Yeah,
see they came
yeah,
from 43 to 65 over the
yep,
last what, 2 months?
yep. And investors seem to like that. They like the fact that they are kind of like making it a lot more smaller and breaking down their divisions and stuff. So
Mm.
yeah, Intel. We talked about this too. Like Intel might have to do that. Like
Oh,
break
they're in
down
the process
divisions
of
stuff.
doing it right now. Oh,
Yeah,
for sure. I know they're doing it.
yeah.
Don't ask how I know, but I know they're doing it.
But I think they're gonna end up in the same position as this. Once they actually announce the revenue that's coming in after all this,
All the
taking it
cuts.
taking it apart. Yep, I think they're gonna start running up too because you're gonna be more nimble now. You don't have to worry about all these different little divisions.
And my thing though, when I start hearing companies that are shedding the fat and things like that, I always, in the back of my mind, always say, okay, when do these employees that are out of jobs, will that eventually hit the unemployment numbers?
Yeah.
Got to worry about that because
Mhm.
CVS is not a small employer. Like they employ a lot of people across
Yeah.
the nation. So,
Yeah.
all of these cuts, they're not the only company making cuts. A lot of companies are making cuts. And again, I always
Mhm.
say that if the people who lose their jobs are able to find another job within a reasonable amount of time, that's always good. But if it starts to linger a little bit longer than people expect, and it starts showing up in the unemployment data,
I
that's
mean,
what
you
you don't,
see,
that's
you
what you don't
see,
want.
we can kind of see telltale signs already, right? Like companies are slow in hiring, right?
Hmm.
Like, so now you're gonna see more people are gonna stay out there longer trying to find a job because you're not gonna be able to find, enough people. Like, and the crazy thing is, if you guys want to do this for fun, go on LinkedIn every now and then and look for any position that you are interested in, and then click on it and see how many people click apply. Because LinkedIn will give you like how many.
Yeah.
I'm telling you, some positions like 100, 200, more than 100 people clicked on this. And it'd be a position like that's probably paying like, I don't know, 65, $70,000. And I'm like, God dang, like all of y'all want this position? It's like, it's crazy, And then, but you see more like the more specialized one, the one that you need that probably have like 10 people apply, right?
Mm.
But so I'll say keep an eye on those because that can kind of tell you like who's on the winning side. Like right now, employers are a hot commodity, right? But if you guys think about it, like a couple of years ago, employers was having a hard time filling positions
Yes.
because there was too many jobs. Now it's the other way around.
That's a
There's too many people.
completely different story.
Yeah, yeah. So I think we've seen telltale signs already of one, a lot of people getting laid off, be it the government, be it companies restructuring, and then we see a lot less hiring. So when those two numbers collide, I think we're gonna get a higher unemployment numbers.
Mm.
So it's just a matter of time, like when those numbers actually hit the books. So
And
finding,
that's the thing that I hate is that unemployment is a lagging indicator. Like we're always looking at past data, past
yep,
data, past data.
yep,
So the only thing that will kind of maybe give you an idea of whether the trend is increasing or not is the jobless claim number. Like because we get those
mm-hmm,
every Thursday.
yep,
That might give you some insight, um, but it's not always the best thing to look at.
yep,
So another thing I will tell people to look at is look at the spreads between treasuries and corporates. So
mm,
the difference in the yield. So look at a high grade corporate bond and then look at a treasury of the same maturity. If those spreads start to get wider, and I think last I checked, they're not that wide, but if those spreads
mm-hmm,
start to get wider, it's a bad sign
yep,
because
yeah,
what that tells you is that there's a lot of risk in the private sector that investors want to be compensated for. Treasuries
Absolutely.
are considered what we call risk free because the government's never going to default and not pay you back on their debt. Like, if you buy a treasury bond and you hold it for 5 years, you're going to get your money
You're
back.
gonna pay, yep.
You hold a treasury bond for 10 years, you're going to get your money back. Like, the government's not going to be like, oh, we can't pay you. Like, that's not going to happen. But on the corporate side, that could happen.
Yeah.
So if there's a lot of risk in corporate debt and the spreads start to get really wide, that I would be very, very wary of. We're not there yet. I haven't seen signs of that yet, but I'm watching that closely along with bond yields.
Yeah.
So,
Yep. Yep.
yeah, if you want something that's going to be a forecasting into the future, those are going to be things that you want
To look at. Yeah.
to look at. Yeah.
Well, finally, man. One last thing I want to talk about. I'm very, very, very disappointed in this shit. I was like, I almost threw my computer away. You guys remember we talked about Apple announcing, Tim Cook announcing something special is coming. Oh my god, dude, that shit pissed me off. They announced a new MacBook Air. Like, I was like, all of that hype to give us another MacBook Air. You know what I mean? It's like, what are y'all thinking? You know what I mean? Like, that was not a product that everybody was expecting. First they announced the phone, then they announced the MacBook M with the M4 chip, and now, yeah, I want to say I'm very disappointed. I was expecting a car. I was expecting a robot. Like, I was thinking like up here. You know what I mean? But I was pretty disappointed, man. And to put on top of that, they were actually down today. Apple was down, but then he moved up a little bit. But I think they're gonna drop. But I was not happy about that, man. So that's the
Apple's
last
another
thing.
Apple's another name that's getting very close to that 200.
Yep.
It's getting
Yep.
close.
Yep.
And if Apple breaks the 200, that's going to be a blow to the
Yep.
market.
That's gonna take the ES, gonna take the NQs, gonna take everybody with them.
Yeah.
Because they're a giant, So
As far as market cap, yeah. Because
man,
let me see. The SMA is 226, the EMA is 225. And
yep.
the last time we got to those levels, it did bounce. But we are starting to get to a area where we are seeing some weakness.
Mm-hmm.
And this is the third day of lower highs and lower lows.
Yep.
Even though today was a pretty significant bounce off
I
the
think the
low.
bounce. I think the bounce came because of the tariff, because they were already on the way down. I think they hit like
Mm,
227. I
what
think
was
they
the
went
low?
down to like 227 or something like that, and then it just bounced from there.
229. Yeah, 229
229.
was a low. Yeah.
Yep. But then you saw that flow that I sent you. I mean, there's some
Yes.
crazy Apple puts that's coming down. So I don't know, man. We'll see.
Yeah. I am in the caution camp. Like I said, I am not buying any sort of. I mean, I'm at a point where it's like I just want to buy puts that go out to like maybe May or June and just
Mm-hmm.
hold them. Like I want to do that, but on a day like this, I tell myself I should wait.
Yeah, yeah, because you never know. You never know. If you started this day saying you're gonna do all puts, you see what happened.
I mean,
if you
man, when I tell you I was scraping my way through trades today, oh man, I felt like somebody trying to get their finger down a Pringles can and get like the crumbs.
That's too
Man,
funny, man.
I don't know, but I mean, I just like if the market's gonna drop, just drop. Stop playing with my Stop playing with my emotions, man.
Wait, did you see what China said? They
Oh,
basically
I
said that
did. I
they
saw that.
said that's crazy, man. That's a threat they're willing to carry too. That's crazy. They said if war is what the US wants, be it tariff war, trade war, or any other type of war, we're ready to fight to the end. Like, damn. They're ready, man. They're about to do those damn, what's that movie that I'm thinking about? Oh man. But
Chinatown.
Braveheart. I'm thinking about Braveheart. You know what I mean?
Oh,
Like
okay.
like
China,
we gonna fight.
China been listening to too much "Squabble Up" by Kendrick.
Yes. they brought Kendrick type of energy, man. It's like, y'all ready? We're ready to go. Let's go. You know, we're
And the
gonna be
thing is
outside.
that I've noticed is that when you look at who Trump is negotiating with, he's not negotiating with China.
No,
He's just negotiating with Mexico and with um, Canada.
China. Yeah,
I haven't heard no negotiations with China.
it's happening though.
Okay.
I promise you, it's happening because if you think about it, he said him and President Xi has like a good relationship. I don't know if you
Okay.
recall that, like a while ago. That's what he said. It's like, yeah, me and
Mm-hmm.
President Xi talked. We have a good relationship. I think they are negotiating, but they're just not talking about it in public.
Gotcha. Because
So,
I know one company that had earnings this week, and they talked about that the whole tariff thing is kind of messing their business up. Was Target?
mm.
Target, if I'm not
Target
mistaken,
got a lot of problems, man.
yeah,
Outside of tariffs, they got, and then they're dealing with a boycott now. A lot of people are boycotting them because of the whole DI stuff. It's like they got a lot of problems, man.
yeah. If I'm not mistaken, Target is starting. They hit a low of 102 back in 2023. They're
Yep.
getting close to another low.
Yeah. I
Yeah, they're
mean,
getting close to another low. So
yeah.
because if you look at that last substantial drop from their last earnings, they took that low out.
Mm-hmm. Mm-hmm.
They took that low out. Yeah,
Yep.
Target's got a lot of problems, man. They got a lot of problems.
Yeah. But
So
yeah, man, before we close, any advice going into the closing this week, to the tomorrow and Friday?
this is what I'll say. I know there's going to be a lot of temptation to buy the dip.
Mm.
You're
But the
you're
dip
not
go, the dip keep dipping.
the dip keep dipping. And I don't like I say I always say this. I don't care how smart you are, I don't care who you are, even institutional investors, you're not going to time the bottom.
Yep.
You're not going to time the bottom. So if you are somebody who is looking to buy the dip, dollar cost average. I'll say it again. Probably heard this a million times. Dollar cost average.
All right.
But I would also too, just for my sanity and patience, I'd probably wait until I see what those GDP forecasts look like, and I'll
Mm-hmm.
probably wait until Jerome and the rest of the Fed talk about what they're looking at. Because if GDP is negative, they might have to start rethinking of whether or not they're going to cut rates.
Right. Right.
Because if the economy is slowing down, unemployment's going up, that might force their hand. It just might.
Yep.
Now, another thing that you also have to be mindful of, and you're probably hearing this when you hear it on CNBC, is a word called stagflation.
Stagflation.
Stagflation is a terrible thing. So basically, what that means is inflation is going up, but growth is basically going down.
Hmm?
That's a terrible combination. That is a terrible combination. And if we get into a place where we start to see stagflation, the market is in trouble. So there's a lot of moving parts. And if you're an investor who's looking to make long-term investments, you have to be patient and prudent. Don't
Very
rush,
patient.
don't rush your strategy. Do not rush your strategy because you're going to, especially in this type of volatile market. Like if a client came to me and was like, Wale, I got 100K I want to put into the market that I need in the next 2, 3, 4, 5 years, whatever, long-term investors. I'm going to take that 100K and I'm probably going to cut it up in maybe 10 to maybe even 20 pieces and deploy
Mm-hmm.
that over time because you don't know where things are going to go. I'm talking
Right.
about multi-million, billion-dollar money managers that are sitting in front of their computer talking about what do I do?
Mm-hmm.
Like, what do we do? So I would I would exercise patience. Exercise patience.
Absolutely.
And once we get more clarity on where things are headed, then you can start to make assessments.
Right.
But that's follow what the data is telling you. Try not to make predictions. I mean, even from a day-to-day standpoint, you look at something and you're like, I'm bearish on this. Next thing you know, it's bullish.
It's bullish. Yep.
Or you'd be like, I'm bullish on this. Next thing you know, it's bearish.
Mm-hmm.
Trying to make predictions is an easy way to get chopped up. So
Facts. Facts.
I got chopped up on Monday. I was up on a trade within seconds. I'm not even, I mean, I'm talking about the second candle on a 5-minute chart. took out a 1% move, got wiped out on Palo
Oh
Alto Networks
man,
on the second candle. That's the type of
man.
market we're in right now.
Yep,
So
yep. Well, thank you for that, man. Let's wrap up. One thing I want to say is tomorrow morning we have the initial jobless claims, 8:30 a.m. Central, Eastern. So keep an eye on that. And then on Friday we have the U.S. Jobs report. We have the unemployment rate, and then the hourly wages also. And I think a couple of the Fed speakers are probably going to speak. I think Michelle Bowman is speaking at 10:15 on Friday. President Williams speaks on at 10:45. So I don't know what's going on there. The Fed governor is speaking also. And then Jerome Powell speaks at 12:30 p.m. on March 7th. I didn't know that.
ooh.
Right. So 12:30 p.m. March 7th, Jerome Powell is actually going to be speaking. And then consumer credit also comes out. The consumer credit for January comes out at 3 p.m. on March 7th. That's actually going to be a number that I'm going to pay attention to. Consumer credit.
Man, consumer credit is
Yeah.
yeah. There's nothing pretty about consumer credit right now. Nothing.
Yeah.
Nothing.
I want to see what that number actually going to look like and how we're going to react afterwards. Because, yeah, that's crazy. But yeah, I didn't know Jerome was speaking on Friday. So that's a good one to keep an eye on, man. So 12:30 p.m. Friday Eastern, Jerome Powell will be speaking. So we'll see what he says. All right,
As a
man.
as a trader, I tell people this is one of those weeks where you just might have to take it easy.
Yeah, might have to chill out.
Might have to chill out.
Mm-hmm.
You know. I'm perfectly fine saying that in this market, I'll be honest with you, there's like today, I was just like, what do I do?
Yeah. You
What do I
took your
do?
ball and you went home today.
I went home, man. I had 3 scalps on QQQ. I think one was like 18%, one was like 30, and I think one was like 15, 20-ish. And I said,
Yeah. Yeah, you took your ball and you went home. Oh man, that was funny.
yeah, I was like, I'm done. I mean, I had other stuff to do, but I told myself, like, this is a market where if you can't watch it tick for tick,
Yeah. Yeah, you're not doing it.
I'm not doing it,
Yeah.
you know?
They were roasting me in the group, man. They're
I
like,
saw that.
like Wale took his ball and went home. It's like, I don't want to play no more. Oh, that was funny.
Oh, wait, we got a question in the chat real quick. It says, would the possibility of cuts by Fed being bad due to something being broken be more negative for the market as opposed to prior cut cycles recently? Man, how should I put it? I think it depends on how much they cut.
Mm.
I think it depends on how much they cut. So if you look at the cut that they did during COVID, they basically went to zero. That
Like
was a huge cut.
quickly too. It
And
wasn't
it
like
wasn't even during a Fed meeting. It was an emergency cut.
right.
So something like that could be a market catalyst. But if it's a gradual cut, like 25, 50, I still think that the market is still going to have a negative reaction because again, future earnings is what drives markets, or supposedly is what should drive markets.
Mm-hmm.
If things are slowing down and the market starts to sniff that, we have to do what's called a repricing. Market has to reassess. Okay, well, if growth is slowing down, what do I assess stocks at moving forward? So that could be a process that takes a few months. So it may not just be a quick fix. Like that COVID Fed cut was like a quick fix because they went straight to zero. That was like over 100 basis points cut overnight. So, and I don't anticipate the Fed will do something like that right now unless something catastrophic is in the works.
Yep.
So we'll just have to wait and see.
That's a
But that's a good
fact.
question. Good question. Good question. But
Well,
yeah, that's it for me. That's all I got.
all right, y'all. Well, keep an eye on the market tomorrow and Friday. And like Wale said, if you don't have to do anything, just don't do anything.
Yeah.
Sometimes just sitting back and watching the market will probably be the best thing you can do.
Yeah.
So
Sometimes the best trade is doing nothing.
there you go. All right, y'all. Have a good night. We'll talk to you guys back here on Friday, same time.
All right,
Peace.
everyone.